Welcome to ForexTV.com. It's Tuesday, April 29th. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade as of 1:05 p.m. Eastern Time, Euro dollar is at 1.5584. Sterling dollar is trading at 1.9709, while dollar yen is at 103.65. U.S. equities are lower with the major indexes seeing red. In a U.S. data heavy week with Q1 U.S. advanced GDP, non-farm payrolls, and manufacturing on tap, today's U.S. data reflected weakness in key sectors of the economy. First of all, the Conference Board's Consumer Confidence Index fell to 62.3 from a March reading that was upwardly revised to 65.9. And the S&P's Case-Shiller Housing Price Index fell by 12.7% in February. This follows a 10.7% decline in the month of January. This afternoon, I'm joined by John Person, President of National Futures. Good afternoon, John.
Remy, good afternoon. Thanks for having me.
Thanks for joining us today. Well, the Federal Open Market Committee kicked off its two-day meeting today with the rate announcement scheduled for tomorrow afternoon at 2:15 p.m. Eastern. So, John, let's start out with your expectations for the Fed's decision and whether you expect the Fed to change their language post-announcement.
Well, I think, we are 50-50 between no rate cut and a quarter point. I don't think the Fed has any intentions of lowering rates by more than a quarter, but I think that they can and should act if they're going to ensure a level of confidence into the marketplace and financial institutions before the elections. This next announcement at 2:15 tomorrow Eastern Standard Time really would be a key time period to lower interest rates to boost consumer confidence, which, as you probably reported, has hit a 5-year low, especially against this home price drop, which is just something that I think would help the market a little bit by showing that the Federal Reserve is still there. They see the needs of the industry by lowering rates a quarter point. It would be more of a token rate cut more than anything that would be helpful at this point, but it would be helpful to the point where it would boost consumer confidence just from the fact that consumers and banks and institutions know that the Federal Reserve is still there for them. Remy, I think that the key is that if they wait too much longer and if they get to the next FOMC meeting, which is the last week of June, and then after that, I think you're getting too close to an election time period, and no one wants, and the Fed certainly doesn't want to be one seen as taking sides in this presidential election race. So I think right now they need to act, and that they probably a quarter point is all they need to do at this point. It's what the market's kind of priced in, and I think that's where the dollar has kind of hit a cap on this rally against the euro currency, which has been supporting right around that 55.5 mark in the last few sessions.
Okay, John, so now that you've laid out the groundwork, let's talk about how this translates into the majors in the FX market. Starting with euro dollar, while all eyes are on the Fed decision and statement, what's your forecast for euro dollar?
Well, with the euro dollar, the euro currency, I think that, number one, if the Fed's accompanying statement says that they are, more likely concerned with inflation, it would absolutely signal that this would be the last rate cut, and that if they can come out and say that they see some signs of bottoming, that the worst is almost behind us. I think that the U.S. dollar has a little bit more leg room to the upside against the euro. The euro possibly within the next 6 to 8 weeks can see it break back down to around the 147 area. Remy, a lot of people have talked about the dollar and commodity prices, and there seems to have been a detachment which, from, say, last August to just about approximately early February, we've seen as the dollar declined, energy prices were up, the euro currency was up, and gold prices were up. And now we kind of see a little bit of detachment where gold prices are getting slammed. Energy prices are still, even though they're down today, they're still significantly higher, as is the euro currency to where they were just 3 and 6 months ago. So there seems to be a little bit of detachment. So I think that if the dollar does maintain support here, and if the Federal Reserve's accompanying statement can kind of give a clue that they feel that there's a bottom and that their next concern really is the target on inflation, then bottom line, I think the dollar stabilizes the euro currency back to 147 in the next 6 to 8 weeks.
Okay, John. Well, while we're still taking a look at the euro, what's your forecast for the euro against both the UK pound as well as the US dollar going forward?
You know, the euro-pound cross has been one that's really been a stellar trending market. I think as the European zone has seen, again, a hard line on interest rates and their hawkish view on inflation. The UK and with the British pound has seen some softening in their rates, and so we've seen a tremendous gain on the euro versus the pound. I think the pound has obviously, you know, the UK and the British economy has some significant issues going ahead, similar to the U.S., and so I see that the pound can weaken further, and I think that, you know, you'll probably see the exchange rates fluctuate against the euro and the pound right about where they're at, because I think they're both going to deteriorate against the U.S. dollar. I think that the pound probably has a chance, Remy, and I'll give you some price projections and some support and resistance for the viewing audience, what they can look for. But I think the pound definitely could see 193 to the downside in the next 6 weeks or so.
Okay. Well, John, now that we've covered euro dollar as well as sterling dollar, I want to take a look at the commodity currencies of the Aussie dollar as well as the CAD. You briefly touched on energy prices as well as gold, which have indeed been pulling back in today's session. But given your fundamental outlook for the Australian as well as Canadian economy, what's your technical outlook for the Aussie dollar and the CAD?
Yeah, I think the Aussie dollar, you know, it's more weighted with the Australian economy. I think that, you know, we're going to see a little bit of weakness, but I don't think it's going to be that much more detrimental. Let's put it that way. You know, people look at if you overlay a chart of gold and the Australian dollar, you'll see a very a strong resemblance in chart patterns. And I think that, you know, gold's probably got anywhere from another 25 to maybe another, at best, $40 on an intraday low from here. Currently, gold's trading at $877, and so, you know, by looking at a commodity-based currency such as the Australian dollar, I think that you'd say, you know what, that market probably has maybe another 2% to the downside. When you look at the Canadian dollar, though, as such a rich, you know, country in all facets of commodities, with especially energy, I think the Canadian dollar in their economies, you know, certainly going to uphold a little bit more than the Aussie. So I think the performer here is the Canadian, even though it may go down to another 0.5% to 1%. It's not going to see a significant decline versus the Australian dollar. In other words, I think the Canadian dollar outperforms the Aussie on the way down here.
Okay, and last but not least, let's wrap it up with a look at the Japanese yen. Dollar yen is up at the 103.65 level in New York afternoon trade, while euro yen is around 161.52. But what's your recommendation going forward for the Japanese currency?
Yeah, you know, this is the Japanese yen has definitely been a wild mover in the last, 4 months and even longer. But I think and a lot of attention focusing on the carry trade. I mean, the joke just a few weeks ago, if I may add, was that, you know, soon enough the U.S. dollar was going to weaken so much that it would become the new carry trade vehicle. But at this point in time, if the Japanese yen really it needs to, right now it's pressing a trend that it's started to establish since around the middle of March. And this uptrend, we violate that trend, number one. If we take out, for me, a key critical point on the charts is if we see a daily close, and that's a daily close below this 103.50 area, then I'm looking at the market easily getting back to around 101, 180 on the spot Japanese yen versus dollar. So that's, you know, right now it's, you know, trading around 365, and so if we can see the market close below that low, I think the market opens the door up for a clear momentum trade for at least another 150 pips to the downside.
Okay, John, thank you very much for joining us today, and thanks a lot for your insight and analysis. This has been your Forex Market Buzz with John Person, President of National Futures. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange right here on ForexTV.com.